Well, hello everybody and welcome to this episode of Fantastic Female Fridays. My name is Susan Hayes Culloden and I'm really excited today to bring you a fantastic guest who I'm going to tell you all about in a couple of moments. So, to those of you who are new to the show, let me tell you a little bit about how Fantastic Female Fridays began. And that is that now almost 2 years ago, we started this show because we really wanted to do something right here at VectorVest all around investing in women. And there are differences in how women invest to men, and there are different ways that women learn in comparison to men. There are also, of course, different ways that women use money in comparison to men, as well as lots of similarities. So to those of you who are wondering if you're a guy and is joining us here today, are you welcome? Of course you are. You are super welcome indeed. But as I mentioned, that is where the show began. All those, as I say, at this stage 2 years ago. Now, when we began this series first, I used to personally deliver each and every one of the episodes. And of course, you can go back through our back catalogue, through our playlist here at the VectorVest YouTube channel, and you will see it. But then what I decided to do, and I spoke to the production team about it, was to start bringing amazing women onto the show to talk to you about certain things they were doing. Maybe it is in business. Maybe it is from a wealth management point of view. Maybe they have nothing got to do with money but can teach us a lot. So we've had a physicist on the show. We've also had, of course, the CEO of VectorVest, Linda Royer. She has been here on the show. We've had people who are in the industry, outside of the industry. We've had people who are leading women through developing from a self-development point of view, as well as people who aren't involved in that area at all, because we genuinely believe in diversity and inclusion, and of course in genuinely hearing from other people's stories and learning along the way. So I can see here that you are all flying in the door here, if YouTube had a door, which of course it doesn't, but you know what I mean. It's a matter of speaking. So before we start, can I just ask everyone to please just tell us there in the chat where you're tuning in from? So I can see here as you're joining, you're all very welcome. I can see that there's lots more people who've just joined now. So you're all super welcome indeed. And please do pop it in there into the chat. Just tell me where you're tuning in from. If you are looking at our episode today on a mobile device, then you can click on the chat button that is just underneath the video. So as I say, just let us know there where you are tuning in from. When I'm turning my head to my right like that, that is because I am keeping a close eye here on the chat, and it's always super to see where you're tuning in from. Okay, so we can see that the first person to answer us here is joining us from Philadelphia. You are very welcome indeed. Thank you very much for joining us here. Andrew is joining us from San Jose in California, place I haven't been actually since 2013. I went on a trade mission back there, back at that stage. So keep them coming. Keep them coming here. I can see, hello Bill, regular is joining us from Salt Lake City in Utah. We also have Jawar, who is joining us from South Carolina. And you may well be aware actually that the headquarters of VectorVest is in North Carolina, so a neighbouring state. Okay, and again, to all of you new people who've just joined us, you're all very, very welcome indeed. And please do, as I mentioned, please just pop it there into the chat and tell us where you're tuning in from. Now, let me, while you're doing that, tell you a little bit about today's guest. So the person that I'm going to be introducing you to shortly, her name is Allegra Brantly. And let me tell you where I came across her. So as you can imagine, in preparation for this show, all the time, I'm always keeping an ear out and an eye out for people who are doing brilliant things in this area. And I came across Factora Wealth. I can see here, Ion is joining us here from Trippin UK. You're very welcome indeed. So I came across Factora Wealth, and I came across the podcast, the Coffee and Coin podcast in particular. And then from there I went and I checked out the Instagram, and I checked out in essence what Factora Wealth was all about. A couple of things really stood out to me about what Allegra does. Number one is she really does talk numbers. She had this fantastic episode, a podcast just before Christmas, where she herself was being interviewed this time. And what she did was she spoke about her own journey with money, and she's got a fantastic story, and hopefully we'll get a chance to hear a little bit about that today. But she's got a fantastic story of how throughout her own career, as she has grown and developed and changed and of course increased the amount of money that she's earned, there's been times she made really good decisions, and there's times when the learning happened first and the good decision happened later. But in that podcast, what struck me was that she didn't just talk about her story and the sentiments that went along with it, but she also spoke about the numbers, the hard numbers that happen along the way, so that her audience truly can get a good sense of taking ideas and turning it into action. And then I listened to another conversation that she had. And this time, she wasn't being interviewed. She was leading this conversation herself on her podcast. And she was talking about how to get started with investing. And she spoke about what it's like to do it yourself, which of course many of our own audience here at VectorVest does. She spoke about robo-advisor, and one of my own episodes of the ESG and Tech Show was all around robo-advisor. So I'm very well aware about what it is and how it works. And then she also spoke about working with a money manager. What I liked is, she explained all of the three options very clearly. She's not afraid to give her opinion, and I'm not either. But the third thing is, again, she left her audience in such a way where there was practical, tangible touch points that she could build on, and that people who were listening could go and implement afterwards. And then the third thing that I really like about Factora Wealth is where it's going. And if any of you take a look on the Factora Wealth Instagram, and by the way, not alone do I recommend you do that anyway. If after the show you check out the Factora Wealth Instagram page, you will see that Allegra and I are going to do a quick Instagram live together, distilling the key points that we discussed during the show. So you'll also have an opportunity to see that. But if you take a look there as well, you'll see statements from a lot of the people that Allegra works with within her community, whereby they really are achieving life-changing things. And that's ultimately where I really felt our values aligned. So for all of those reasons, I'm really, as I say, delighted to introduce you to Allegra today. And before I'm going to bring her on screen, I'm going to say hello here to Matthew, who's just joined us from New York, and Maria. Hello Maria from Maine as well. Great to have you back, Maria. I know that you're a super fan of the show as well, and we're delighted to have you here. So on that note, as I say, now that I have told you all about her, let's head on over here to meet her. So on that note, 3, 2, 1, let's bring her right in. There we go. Hello indeed, Allegra, and how are you keeping? I can see here, perfect. You're right in shot there. Well, first of all, you're so welcome indeed to our VectorVest audience here today. And I can see through, you've heard me there speak about where people are joining us from all over the world to listen to you today. And Maria says thank you. So you're always deserving of that mention there, Maria. So first of all, Allegra, would you mind sharing a little bit of your story with us, based on, of course, the fact that it has been a really interesting journey and there's so much more to go, but let's take it from the top.
Absolutely. Well, I think I was always meant to be in personal finance and investment education. If I really take it from the tip top, I was raised by a single mom who struggled financially, but was very gracious in all the opportunities she provided for me. She worked really hard so that I could go to good schools and get a great education, but she had no personal finance habits that were quality, which meant that even though there were good years where she made a lot of money, she didn't save or invest any of it. So I then went to school, got a job in New York, and didn't know that I should negotiate my salary or any of those basics. But I got to this place where I realized I was significantly under earning some male counterparts doing the same job. And I was in sales, so I knew I was doing a better job because fortunately sales has the numbers tied to it. And I went up for a raise and I was told that I didn't deserve it because I was too green. I was new to sales. And I said, there's no way, because if I'm producing, I should be earning more at the end. So I really fought for myself and I managed to get a $25,000 raise in one fell swoop. And I turned around and I started sharing that experience with all my friends, encouraging them to also figure out if they were underpaid and how to do that and how to go about having the conversations and preparing to get salary increases. And it was very effective, to the point where they told their friends and everyone was calling me, and I said, okay, I guess I'm a salary negotiation coach. I'm going to charge for this. So I did that for a while, but the real illuminating moment was when I recognized that just because you make more money doesn't mean you have more money. Because now I was finally living in New York, making really good money in the six figures, But I got a nicer apartment. I went on a trip to Europe. I bought a handbag. I spent everything that was coming in before I even saw it. And then I looked around at my female friends that I'd helped them get raises and the clients that I worked with, all women, and I realized we're all doing this exact same thing. So the problem wasn't in earning more money. It was in not having quality financial habits or an understanding of how to keep and grow the money that you did have. So that started my financial revolution. And as I was approaching 30, it was just blatantly obvious to me that I had to figure this out on my own because I didn't get a personal finance education in school or during my business degree. I mean, I learned business accounting, but that's not what I was talking about or what I needed. And I didn't get it at home either. So I went out looking for it where everybody does, the Google machine. And then I found my way to different podcasts and different books. And I really just spent a year deep diving all of this information. And it was hard. It was lonely, but I forced myself to do it. And then I got to my next predicament, which was, okay, now I've learned all about investing, but I don't know where to start and I don't want to get it wrong. Mm-hmm. So I was really paralyzed in how to move forward. So I paid somebody to help me. And when you pay for something, you pay attention. And so I believe there's a lot of importance there. What you focus on and prioritize with your time and your money means that it's important to you. So I was able to open up a brokerage account, set up automations, and really change my financial life in a matter of months. Whereas I had zero in my savings and no investments. Speaking of being imperfect with money, I had cashed out of my first 401k to start a business before this one. Yeah, big learning there. Took a massive tax penalty because it was obviously not for an approved reason. But it was the only place I had capital. So, you know, you live and you learn. And I always say to women, all financial mistakes can be undone, asterisk, asterisk, student loans. Those will follow you to the grave, unfortunately. And hopefully America is going to do something about that in the near future. But after I had fixed my financial life and I was feeling really confident and empowered with growing savings, growing investments, I realized I wanted to help other women do the same because I felt like a new person. I had no more of this anxiety or stress about money. It was only excitement and creativity that I could use this money to do what I wanted to do. And I really think that's what money is. Money is the best tool that we have to create the lives that we want to see around us, whether it's our personal life or whether we have additional money and we can contribute to our community, our family, our nations, or even the world. So I love money. I think it's a great tool. I think it gets a really bad rap, especially with women, where it's very easy to grow up in families where you're told money is greedy or bad, and then you don't want to have too much, but you want to have enough to get by. And so there's a lot of internal work that has to be done. So I created a company called Factora, and we have what's called a wealth circle, and we lead women through all of this, figuring out the mindset piece and then understanding the financial elements and putting good habits in place.
So 3 things stand out for me there, Allegra, that you've mentioned. One is the difference between earning more and having more, and that a headline salary doesn't necessarily equate to whether I want to call it a richer lifestyle or a more stable one, etc. And I think it's an interesting point. And I think there's 2 things in there. One is, of course, the tax side and the negotiation side. Like they're not necessarily things within your control. Within your influence, yes, perhaps, but not within your control. But on the other hand, your spending, of course, much of that is under your control. The second thing that you say is that if you pay attention. And I mentioned earlier on that we had Linda Royer, the CEO of VectorVest, on the show. And I remember that she often says, show me your wallet and your diary and I'll tell you what's important to you. And that idea again, that if you pay attention, that whatever you dedicate resources to is also encouraging of making sure that you back those up with your own effort. And the third thing is all financial mistakes can be undone. I really like that one. Of course, got the asterisks. I didn't miss those, but it's a very empowering thought. So could you maybe take us through then the vision that you have for Factora? Because I understand, of course, the nature of what it's about, as you say, the mindset, the tools and the techniques and the habits. But where is this going? You went from being a salary and negotiation coach. I'm going to put that in your background. Where are you going? What's in your foreground?
Absolutely. So our public mission at Factora is to lead 1 million women to 1 million in net worth. And that's where we're going. Factora is primed to be the best women's wealth building community to ever exist. I am focusing it on the US right now because the financial education and content that we teach is very relative to the US financial system, but all are welcome. We've had a lot of international participants. So I just want to start. We're gonna focus on the US, but I'm happy to be a global place for women to show up in the future. We want women to feel financially empowered so that they can be change makers, and that's what we're focused on. So instead of focusing on earning, because your income is not your most important figure, it's your investing rate, your investing habits, your investing techniques. That is what can grow your wealth exponentially. So we help shift people out of the earn, spend cycle so that they can actually be on a wealth building journey towards financial freedom. So I'm an advocate for financial freedom. And I think that America sold us a bad dream that we need to work until we're 65 and then retire. And do what? Why can't we learn how to invest so that we can build up enough passive income to outpace our expenses? And then we don't even have to worry about building one pot of money, the right number that's going to last us until we pass and hopefully have enough left over for a legacy. We can build something through buying assets that last in perpetuity.
Well, I mean, what's very, very clear here is your passion around this, Allegra, and it's clear to see how that powers through within Factora. And at this point, I'm just going to ask our audience, what type of financial habits do you think are really good ones? Because of course the show today is all around how to be imperfect with money, and we'll talk about that. But what financial habits do you have? Do you have here, for those of you who are joining us today, what financial habits do you have that are good, healthy, solid, etc.? And let's just take Allegra's take on them. Chris is joining us today from Dunfermline in Scotland. Hello, Chris. You're very welcome. And Maria says here, sales queues were rigged. It was hard to compete in my experience. So I think you've got a kindred spirit there as well, Allegra. Can I ask, while I'm just waiting to hear here from our audience around the good financial habits, can I ask you, who is the type of woman, or what characteristics does she have coming to a Factora Wealth Circle? Has she got all her ducks in a row? Is she very proactive? Is she hungry for more? Is she introverted? Is she any of what I'm describing?
She's some of what you're describing. So the core demographic, but of course we see all sorts of women come into Factora, is that there is a woman who is earning a pretty good salary. She has a 401k set up, but she has this nagging feeling that she's not doing enough. So that's the biggest profile we see. And when they come in, a lot of times they don't actually understand what's in their 401k, because remember, it's your HR department's job to get you set up with one. It's not their job because they're not financial advisors, to help you make your selections. So I can't tell you how many women we see that they open up their 401ks and they're sitting in a money market account. They're not even truly invested. And it's been like that since they started their job. Or they have floating orphan 401ks. So it's really the woman who has this nagging feeling that she's not doing enough, even though she's making good money. And so when they come in, we're able to really help them identify their financial life, the assets, the liabilities, the opportunities, the obligations, so they can build a picture of where they're at right now. And then it's all about your personal goals and your timeline to those goals in order to figure out how to prioritize investing money for investing. And then obviously you need to pick what asset classes you're going to be investing in. So
is there
that's the main woman.
And is this...
We also, I'll say there's one more impetus for joining. There are a lot of women who either come into a much higher paying position or a recent financial windfall. So whether that be they're working at a startup and they receive a lot of money from an acquisition, or maybe just personally there has been someone pass away in their family and they receive an inheritance. I think that's another situation that brings women to Factora, because they feel like they have to be a good steward of this newfound money and they're not sure what to do with it.
Mm-hmm. Well, and it's picking up on where I was going to go there. Is this a technology that you have? Is it a plan or a program? Is there accountability built in? How exactly does all of this translate into action and, of course, results?
Yeah. So the Wealth Circle is a 12-week live course that you're going through with a cohort. So we just had 430 women go through it in the spring. We do it twice a year. So it's in the spring for 3 months, and then we'll have the next one in the fall for 3 months. And so you're basically learning lessons on personal finance and investment topics, and then you are coming to live calls and you're breaking out into little discussion groups so that you can actually talk about what you're learning, consider your financial strategies, talk about your goals. All these things we keep very close to the chest and don't necessarily have a group to go be in support of us. Whereas I think a lot of times men do, they're constantly talking about their investments. They're leaning into this conversation. Women aren't. This is the place that they can. And we've built a format around that. And then, yes, we assign people accountability partners. So we'll match you based on your current net worth, your current financial goals, so that you can get together and discuss what are your challenges, what are your plans. So and then we have a Slack channel. So our community is very busy. They can get their questions answered. They can also connect. We're completely agnostic over what financial products or institutions that women use. So you'll see women say, okay, I'm getting ready to open up a brokerage account. I have my 401k with Fidelity. Do you recommend I use Fidelity for like a non-tax advantaged account? And then women are just on there saying, well, I use Vanguard, I do this, I do that, so that they're really talking about their different options. And it's very exciting when women see other women opening these accounts and making their investments. They are so much more poised to do it themselves. And that's why there's so much action taken. So it's a mix. It's education, it's community, it's accountability.
Yeah. It also sounds like that clustering effect as well of role modeling and the momentous action. We've had a few good money habits that have come in here, Allegra. So Kirk3331 says repay debt ASAP and save a little every month. And Maria says, I stay within my comfort zone. I follow the money as well. Good stuff. Glad to hear as a sense of some good money habits in there. But Allegra, today's show is about how to be imperfect with money. And when you and I had an opportunity to connect a couple of months ago when we first met in person in this world, this is something that you actually wanted to talk about, is how to be imperfect with money. So can you tell us, what does this topic mean to you?
Yeah, I think that this topic is important because there is no being perfect with money, just as there is no being perfect with life. Both life and investing is just a series of making choices with limited information at hand. That's what we do every day, right? We make decisions without knowing the full picture in our life. And so we have to do the same with our money. But making choices, making decisions is the important part. The biggest risk of all is not making choices, not taking action. So what I'm really saying here is that all action is imperfect, because who has defined that there is just one way to go about something? No one, right? We all do our careers differently. We all have different family dynamics and what we want to create for that. Everyone is supposed to be an individual. That is the point. And so we're going to have an individual path when it comes to our money too. But not focusing on it and not getting educated and not gaining experience is the worst thing you can do.
Well, that leads me nicely on to the next thing, which is what holds people back then from investing. Because if we've spoken about, okay, being imperfect means, as you say, using limited knowledge around, using the limited knowledge you have to make decisions, but making decisions and taking action accordingly. The opposite of that, of course, is not doing anything at all. And what's going on in the chat at the moment here is now, obviously, there's conversation as well around interest rates, etc. So in your experience, what holds people back?
Well, specifically to women, because that's who I'm observing all the time, I believe it's nature and nurture that's involved in holding women back. I think that gender differences are real and normal, and it's in our biology over thousands of years that men went out and hunted while women stayed home and gathered and nurtured the family. So this inherently makes men more prone and more tolerant to risk than women. So I think it's a lot easier for men to invest younger, invest more, and with both of those in mind, they are becoming more savvy investors as they're gaining that experience throughout their lifetime. Whereas I think a lot of women skip this in the beginning of their careers. They're just like, I don't know how to do it. I don't want to get it wrong. So I'm just not going to do it at all, other than the 401k that they might open, right? They're not being very proactive there because they're not the hunter, you know, they're waiting to see what feels right. And we don't have the community to go and talk to about this. That's literally why Factora exists, so that there's a place to be sharing your portfolio numbers, percentages, strategies, etc. Because I don't see women doing this on a day-to-day basis inside their friend groups the way I see men doing it. And then nurture-wise, I think women are socialized differently than men. I think we're told to be kind, calm, well-mannered, and that doesn't really allow for talking about money openly, which a lot of people can consider rude or ill-mannered. So I think what holds us back is truly evolution and modern society. There's a lot to overcome for a woman to say, I'm at the beginning of my career and I'm going to start investing, when she doesn't have a community to talk to about it. She doesn't have a natural desire to do it, and she's afraid of getting it wrong.
Mm-hmm. Well, I mean, there's a clearly well thought out rationale there, Allegra, but also what stands out to me is that, as you say, you've observed these aren't theoretical examples either, from your point of view. Can I ask you, though, if I could ask you maybe a very direct question is, have you ever felt that if women borrow more of the techniques from men, that they would be better off in that regard? Controversial view, maybe, but is that something ultimately that is being encouraged today, or can I be me and you be you?
I absolutely think that women should be talking about money more and investing earlier, which is not, it's more inherent to men. So yes, I do think that we could really lean into that. But I also think that women can do it in their own way. I mean, and they do. I'm watching them in the Factora community. It's like, once they get a little bit of education and understanding of how their financial life ties together, then they can see why it makes so much sense to be investing now, because it is a long-term strategy to build wealth. But if we can't see the end goal, it's really easy to ignore it, because we do live in an instant gratification, one click to purchase, you know, Instagram algorithm has you down pat. They know the next consumer item that you're looking for. It's really easy to get targeted to spend your hard-earned money, and there's no one there educating you on how to keep it and grow it. that's why Factora is here.
3 things I've observed in this area, and I'll be brief with them. Number 1 is that we ran one episode one time all around the consumption power that women have because of the extremely high either amounts that women spend from a household point of view, or an even higher amount that happens from an influence point of view, whether it's vacations or cars, back to school spending, etc. And sometimes when you draw an analogy between consumption power and investing power, that actually can make a big difference. The second one I will say is women can be extremely good when it comes to income, as in managing income, and thus leading in through dividend yields and understanding dividend yields and the power of them. Again, that was a whole episode we dedicated to that. And the third thing I'll mention is, particularly through a vehicle like ETFs, and I know you're a fan of robo-advisor as well, but through something really low cost, transparent, easily accessible, easily visible in terms of your amounts as well, I often find that can be a brilliant starting point. From a confidence building point of view, or drawing an analogy with other real strengths in their lives. Can I maybe as we just bring our conversation, this part of the conversation, to a close, Allegra, because what I'm going to do afterwards is I'm going to take people through 8 techniques about how to be imperfect with money when it comes to investing, to do exactly what you've said. Take action, but understand that there's a limited point of view here. But my second last question to you is this, and that is, how can somebody use the theme of opportunity cost? Because the last thing you just said there is, when people don't necessarily spend it after they earn it and keep it and grow it, there's an idea there of understanding the opportunity cost of your decisions. So what's your take on that type of an idea?
Yeah, I think opportunity cost is really important when it comes to your financial life, because if you choose to spend money here, it means you cannot spend it there, right? Very simply. So, for example, if you were to get a raise at work and suddenly think, well, I want a nicer car, then if you go tether yourself to an obligation that's month over month for a higher amount than your current car might be, that difference in money is getting spent in one place, which means it can't get spent in another place. So one thing that I really love to do is make sure that women know their investment rate. Your investment rate is the amount of money that you invest monthly, divided into your total monthly income. I keep mine at around 40%, which means almost half of my income is getting invested on a monthly basis. If you're aware of or potentially a fan of Mr. Money Mustache, he's very well known for being the leader of the FIRE community, which is Financial Independence, Retire Early. And he has a great kind of graph that shows you the stupidly simple math about retiring early. The more you invest, the less time you have to spend in the workforce is basically the point of it. And we can link it after this. I'm happy to share it. So in his graph, if I'm assuming that I'm investing 40% of my income and all of it's going into the market, and let's say I'm getting an 8% return net of inflation, then I only have to work about 20 more years until retirement. Well, if you're only investing 10% of your income, you've got more like 50 years left in the workforce. So that's what makes me so mad about just online general rule of thumbs where, you hear if you're investing a little or just 10%, you'll be fine. Yeah, you'll be fine if you do that consistently for 50 years and things go in your favor. But this is just me using the stock market as an example over a long-term horizon. We teach women how to invest in real estate, how to invest in business, understand accredited investing. So once they see all the different opportunities where they could be directing their money, it's a lot easier to envision that opportunity cost if they are spending their money and there's no return on that.
And I think the idea there of tethering your money to one thing is quite powerful, because then I think that really puts the focus back onto that decision making. And I'm sorry, I'm speaking to the audience here directly, even though I'm looking at you, and that is, didn't I tell you she's a woman who really talks numbers? Didn't I tell you that? So as you say, when you're talking about a return, the investment rate, how many years you've got in the workplace, etc. Now I have to mention also, Allegra, you strike me as a woman who will be working well past your retirement date, because I know how passionate you are about what the community that you're building as well. But I completely get your intent. My last question, and I'm just going to put this out, by the way, to everybody who's joining us. If you have any questions for Allegra, please do send them into the chat now, because I'm only going to have her for about another 2 minutes. So please do pop them in now, and I'll make sure that I get them to her. But Allegra, what's next? I mean, you've told us about your vision, 1 million women, 1 million net worth. So I can see that that's a big, lofty goal, you know, the best organisation or community for women and their financial ambitions as well as financial freedom. I can see that this is quite, you know, into the distance and is something that will drive you, empower you for much time to come. But in essence, what's the next chapter of the Factora Wealth story?
Well, what's next for me is I'm due to have my first baby in August. So that's kind of where my focus is personally right now. What's next for Factora? You know the mission. We're not stopping until we get there. I also am very proud to say that we are a bootstrapped company. We've turned down institutional investment. I want the women who work here, who are owners in Factora, it's as important, if not more, that I help them build their wealth alongside the members inside of our community. And I think that we will continue to use our podcast, Coffee and Coin, to demonstrate how quickly women can and are transforming their financial lives by focusing on it. Meaning getting that education, getting that community, utilizing accountability to make their goals come to fruition. Majority of women who come into a Factora Wealth Circle, and probably the majority of people, do not have their financial goals written down anywhere or prioritized. And so writing down a goal makes it so many more times likely than just having an idea in your head that you forget tomorrow. That's why New Year's resolutions don't work, right? That's why the gym parking lot is full in January and empty by March, because everyone wants to lose weight or get healthy, but that's not a real goal. It doesn't have a timeline. It doesn't have a system. It doesn't have automations on. That's what we're making sure that these women leave the Wealth Circle having, so that they're just crushing their goals. And what makes them more likely to stick to them is having that community and those accountability partners. Because like I said earlier, women are gatherers. What is Factora's differentiator and what is really working is women being able to see other women doing it, talk about it with them, and have those one-on-one conversations to keep themselves motivated.
Wonderful. That's brilliant, Allegra. And yet another key pearl of wisdom there, which is that you can transform your financial life by simply focusing on it. And again, I mean, you point out the consistency of your method there about having a system, the timeline, having a goal, a written goal, as well as a system behind it and a community to support you along the way. It really has been such a pleasure to interview you, like I knew it would when I reached out to you originally. So thank you so much indeed. I'm going to see you on Instagram a little bit later on, but thank you very, very much indeed for being here with us today, and thanks again.
Thank you so much, Susan. I really enjoyed it.
Super. Thanks again, Allegra. So
Bye.
That now brings us to the next part of the show, where I'm going to now take you through exactly how to be imperfect with money. And the reason that I wanted to talk to you about this is not am I going to talk to you how to make mistakes. No problem there. I'm not going to talk to you about that, but instead what I'm going to do is I'm just going to show you how to take action when you may not be exactly sure about what to do, and how to avoid certain things from happening as well. So I'm just going to see here, I have a message in here. I always managed my 401k because I don't lose a lot of money with my choices, but I know it won't help to grow it more. Can you please give an insight on my situation? So Louise, what I would say is, if that question was directly for Allegra, pop it on there into the Factora Wealth messenger service, if that's who it's for. Now, if it is me, let me go back through it here. I always manage my 401k. I don't lose a lot of money with my choice, but I know it won't help to grow it more. Okay, so I think what you're saying is I don't know how to take more risk in order to grow it more. And I certainly can help you with that. No problem at all whatsoever. So stick with me on that, Louise, and I will make sure to come back to your question. And by the way, anybody that has got any questions regarding either what we've discussed already or new ones for me, of course, please do feel free to pop them in there. All right. So between now and the end of the show, I'm going to give you 8 ways that can prevent you from being debilitated by not taking action, or else that can just help you as you move along and when you're just feeling unsure. The first one, Allegra already picked up on, and that is that you can't know it all. There is no way that I can pinpoint for you a perfect stock that I know will grow year on year, never have any falls or any major ones, etc. And from my earliest days of investing in the stock market, I always took one key piece of advice to heart, and that is that I don't need to predict the future. All I need to do is to be able to analyze the present. And I have to say that is something that I can do very easily and very well and very simply. And I'll show you how to do that just in very briefly now. But my point is that whatever way you analyze a stock, you can't immediately or guarantee its outcome. If you wanted to do that, well, then you would go and you would buy a bond. And a bond is something whereby it's a loan that you would give to a government or to a company, to an organization, and you would then get paid back your money. So you're basically being paid for the time that you give that asset away. So when you get that money back, you get it back at the end of a period. That period of time is called the life of the bond, or when the bond matures, and you would get a regular payment along the way for that as well. That's called a coupon. Now, rates on bonds are quite low because everything there is clear. You know when, you know how much, and you know exactly how much you're going to get back at the end of that bond's life. But of course, and this is picking up on Louise's point here, is that when you're investing in a stock, you don't know how much it's going to be worth on any given day. You can't be guaranteed a dividend, even if the dividend has always been there. You can't be guaranteed you'll get a dividend right along the way. And of course, there is no maturity per se until the day you press sell. So for all those reasons, certainty is not given, and certainty can't be guaranteed. And if it could, well, then you would be taking lesser risk, which of course then would naturally mean quite likely a lesser return. So if you are looking for certainty, the bond market is there. It's just not giving an awful lot of return. So my point is that you're actually being paid for the uncertainty of not knowing it all. You're being paid to build in stock market returns by virtue of the fact that you are making an imperfect decision. And that was the first point I wanted to start off with, is that inherently in stocks is more risk, and that is compensated or over time by higher return. Now, my second one is I also said I was going to show you how to analyze a stock very briefly. Okay, let me do that, right? So I'm going to pop on over here to my VectorVest system. Okay, so I'm just going to pick any stock here. So if anybody wants me to analyze a stock, and I'll be able to do it really quickly for you, pop it there into the chat and I'll take a look. But I'm just going to go to my stock viewer here now, and I'm going to take a look for, what am I going to take a look? This is my watch list that I had built there a while ago. So I'm going to look in here for, what am I going to look for? Has anybody suggested a stock yet? I don't see you have. Okay, I'll do it. I'm going to take the company Coinbase. Okay, so Coinbase is a broker for cryptocurrency, and that is all I know. Okay, so I'm going to say that's all that I know so far. And here is what is going on with that company. So I'm just going to right click here. I'm going to click a full stock analysis report, and I'm going to show you what is in there. Okay, so what I can see here is, before I go on, can I just ask the production team back in North Carolina, I think Joy, you're with me here today. Can I just ask you, will you put the link for the free stock analysis report please into the chat? Just if anybody is joining us here today and they want to analyze a stock like I'm going to do for them now, just if you could give them the link to be able to do that. And for any of you who's a VectorVest subscriber, of course, you can do this multiple times every day. So over here, what I can see is that this stock has got a sell recommendation. So this is because its price has declined below its stop price. I can see that the stock currently, it's priced at $50.42 and its current value is $54.93. I can see that it has got, good long-term price appreciation potential, but it's got low consistency and predictability of financial performance. It has been trending down quite recently as well. I can see that because the relative timing is below 1, so I can see that it's trending down fast as well. So from a technical point of view, the stock is losing a lot of momentum. And also I can see in general that this stock does not have a good combination of value, safety and timing. So fundamentally, from a long-term point of view, it's got potential, but short-term, using momentum and also looking at its consistency and predictability of financial performance, this stock wouldn't be ideal. Now, it's got a stop loss of $92.65 per share. So VectorVest suggested selling this long before the price is at where it's at the moment, and that it is growing its earnings quickly. It certainly is doing that. It's a growth rate of 24%. And I'm just going to look at one more thing down here. It doesn't pay a dividend. Okay, so you can see how quickly here that I can analyze a stock like that. And also, just to show you when VectorVest showed this sell recommendation, I'm just going to pull up the stock graph here. So the sell recommendation for this stock was given when the stock was trading at $265 a share. That's when the sell recommendation was given, and the price is now down to $50 a share. So as you can see here, there was pretty clear. The action here was pretty clear about what needed to happen. Okay, so I'm just going to close that now, and let me instead, if I was to pick another stock, let me pick McDonald's. McD's. Here we go for McDonald's. And in the case here of McDonald's, if I again view the full stock analysis report, pop on over here. In the case of McDonald's, I can see here a hold recommendation that the stock is currently overvalued. So it's saying here that McDonald's is overvalued. Good, relatively good long-term price appreciation potential. Pretty good consistency and predictability of financial performance. Stock performance has been quite muted over the past while, but it's got a poor long-term ability to withstand severe and or lengthy price declines. Solid growth, earnings growth here of 18%, and of course it does have a dividend, and the dividend is 2.36%, which is above the average of 1.16% for the average of the VectorVest database. So you can see there, it doesn't take me long to analyze a stock. I can do that pretty quickly there for you. But again, the point is that I couldn't tell you with Coinbase, and I couldn't tell you with McDonald's. I couldn't tell you what the price would be tomorrow. The prices that I was showing you there, they're live. So they're the prices that you're seeing there live in front of you right now. But and they're changing all the time. So I cannot tell you, I cannot predict the future for you. But what I do know is that on average, the stock market over the long term, over the past 100 years, has delivered about 8 to 10% compound per annum. So therefore, I know that if I was to take action on a very broad base, then on average that I will get compensated for such uncertainty. Okay, second thing I wanted to talk to you about today is you don't have to pick the perfect stock. Instead, the way in which to handle that, or the likelihood is that you may not get it right with all of your stocks, is diversification. And it is, of course, rule 101 when it comes to the market. But all the same, it's important that you diversify your portfolio. Now, that's easier said than done if you've got a small amount of money. If you've got a larger amount of money, well then, splitting up your money across, let's say 10 stocks, then becomes much more feasible. So what do you do in both scenarios? Let me, again, take you back over here to the VectorVest system. So what you can do if you've got a small amount of money is you can buy an exchange traded fund. So an exchange traded fund is, I ran an episode, and again, I'm just going to ask the guys there if I could ask you to please put the link into the chat for the episode, how to talk to your kids about money. Because of course, the people who are most likely to be in a position to not have a lot of money when you get started are the youngest among us. So as a result of that, I spoke about that as well. When it comes to ETFs, exchange traded funds, they inherently have a lot of stocks already built in. So you've got diversification that is going on in there. Now, I might look then for a company or for an ETF, let's say, I might look for one here that has got a long-term ability to withstand severe and or lengthy price declines, okay? So for example, maybe, I've got McAdee's in there. I might look, say, I'm just going to take a very broad-based one here, right? So this is a global ETF, for example, and this one is a company or an ETF that tracks the largest 100 stocks in the US, right? That's simply it. The largest 100 company, not in the US, in the world. Or I might take a look at this one here, right? The iShares S&P 500. the largest 500 companies in America, and all are in that fund. So very, very low cost to buy and sell. But the point here is that you've got inherent diversification built in there. In fact, both of them have got a sell recommendation at the moment, which is going to tie in with the market timing that I'm going to speak to you about in a moment. But the key thing here that I wanted to point out to you is this, is that diversification, if you have a small amount of money, doesn't have to be difficult. You just have to go, rather than go through a specific stock about it, instead what you need to do is that you need to go in a more diversified way. Okay? Now, what if you are in a position where you can split your money across a range of stocks? Well, again, there's a couple of things here that you can do. You can simply take a selection of stocks that meets a certain criteria. Okay? So let's say that you want a combination of fundamental and technical indicators in a stock together. Okay? So together you want to find the best combination of fundamental and technical indicators together. Well, then you might do something like consider a portfolio of the best combination of value, safety, and timing, right? So the best combination of value, safety, and timing here. I'm just going to, no, somehow I only have I can only put in here the top 10. Not quite sure where that's going on. But anyway, so you can see here is that a lot of these stocks here actually are ETFs as well, because they have got a good combination of value, safety, and timing at the moment. Yeah, and I've just one stock here that doesn't, and that is a Sanderson Farm here, for example. That's a food stock as distinct to the others. But what you can do here is just look at the way in which you can buy a collection of companies that have the characteristics that you're looking for. So in this case, it might be, how do we put together the best combination of value, safety, and timing? Simply click once on this table here and you'll bring all the stocks with the best combination of value, safety, and timing right up to the top. For those of you who aren't familiar with what value, safety, and timing are, value is long-term price appreciation potential. Safety is consistency and predictability of financial performance. And then timing is the direction, magnitude, and dynamics of those stocks as well. Okay, so you can see VST packages the whole lot up together. Now, perhaps again, that's not necessarily what you would like to do. Well, then there are, of course, model portfolios that are built in here as well. And in the portfolios, what happens in here is these model portfolios then have got a specific set of stocks that are more than one specific criteria. Let's say VST, there's more in line in there. And then because VectorVest is keeping an eye on these model portfolios, then you have that extra sense of greater surveillance on them as well. So my point is, you can handle diversification any way you want, whether it is from the point of view of an exchange traded fund, whether it might be looking for a collection of stocks with a certain criteria, or else through a model portfolio. Diversification is certainly very possible. Okay, now, what do we do if a stock starts to fall? Well, we can handle that one as well, because what you can build in there is a stop loss. And a stop loss is an automatic trigger to sell your stock at a specific point. Now, I could do a whole episode on stop losses, and perhaps I should, right? But there's a whole plethora of ways in which you can put a stop loss in place. And here's how I know. Number one is I've used them on my own brokerage account, but if you want to get a sense of the type of ones that are there, let me show you a way in which that you can see how to do that. So what I'm going to do is I'm going to put in here a trade system. Sorry, I'm not going to put in a trade system viewer. I'm going to go over here to backtester, and I'm going to create a new backtest, and I'm going to build a custom trading system. And in here, I'm going to put in here a stop, and look at all the various different types of stops that are actually available in here, right? So as you can see, there's lots and lots and lots are all in here already, right? So there's lots of different stop losses that are already available in here. Now, I'm only going to talk to you about one, right? I'm just going to talk to you about one. And that is that you can put in a certain number, right? You can simply put in a stop loss at a certain number that if a stock falls to that level, that's it, you are out, right? And a lot of people put in that number being 10% below the price they bought at, or 20% below a price it's currently trading at, etc. And you can do that, right? You can do that. You can simply do that. Put that number then in as a stop loss on your brokerage account, and off you go. But what I'm going to do instead is I'm going to show you that at VectorVest there is a specific number that is put in here for every single stock. Okay, so for example, let's say I own Colgate. Okay, in here in Colgate is that VectorVest has its own stop loss, and I'm going to tell you what that stop loss is, right? How it's built in the background, and it is a 13-week, okay, 13-week, which is a quarter of a year, a 13-week moving average of the price adjusted for risk. And the better the fundamentals, the wider the stop is. The worse the fundamentals, the tighter the stop is. Now again, I can show you how I know this, because if I right click here and I look at the view full stock analysis report, is that this report actually gives me an understanding of how this is calculated. You can see here, because it is computed from a 13-week moving average of its closing prices and is fine-tuned according to the stock's fundamentals. As I say, the better the fundamentals, the better the RV, the relative value and the relative safety, the better the long-term price appreciation potential, the better the consistency and predictability of the stock's financial performance, the wider that stop is going to be. But on the other hand, if there are very weak fundamentals, then the tighter the stop is going to be. So you can certainly put a stop price in place so that then if the stock falls below that level, you are out. So today, live here as I'm joining you, Colgate is trading at $73.38 and the stop price is $71.69. That is the 13-week moving average adjusted for risk. And again, you'll find that there on the VectorVest system. If you don't have the VectorVest system, you can always put in your own, and you obviously then have to make the decision about what it is. But that is again how to be imperfect with money is, if you don't know exactly when to sell, but you don't want to lose more than X amount, you can put in a stop loss to prevent that from happening. Okay, what's next? Well, the next thing you can do is that if you're worried about taking action, right? If you're worried about taking action with your money and you're not quite sure, okay, like how do I get started? Just as Allegra said there earlier, one of the key things that you can do is that you can pay per trade first, okay? So let me show you how to do that right now. There's two ways of doing it. One is more complicated than the other. So I'm going to start off with the simple one first. What you can do is go to your watch list viewer, okay? And click on new. Click on new. I'm going to create my watch list here. And I'm just going to say Susan's FFF watch list. Watch list here, okay? And click add. Here we go, Susan's FFF watch list. Now in here, I can, let's say that I want, again, I'm going to just pick on the ones that I've picked out for you there already. Coinbase, MCD. Right, so there are 3 stocks that I looked at there for you today. Clearly now you can see that by me creating this watch list, and I'm going to right click and auto fit all the columns, what you can see now very simply is that I have created a watch list where I can track how these stocks are performing. So that's a way in which you can pay per trade, right? You can just create a watch list and simply watch how your stocks are performing. So you might analyze a couple of these and say, okay, I'd like to watch this, 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 and this, and see whether these stocks are going to rise based on the analysis that I might have done. That's a way, really simple way that you can do it. Doesn't cost anything for you to put together a watch list. All you need to do is just, simply go ahead and build it. And you can do it here at VectorVest, or you can you can use another tool if you'd like. But in essence, that's a way in which to watch how things are moving forward. Now, on the other hand, what you can then do is I can also go over here and I can create a portfolio. And I can create a new portfolio in here. Down here in my portfolios. Down here in my portfolios. Okay. And I can create a portfolio up here. And instead then, what I can do is I can put together, I can decide how much I put in per trade. I can put in the day that I bought. I can put in the cost of the trade. I can do all of those sorts of things. All of those can be built in there. Each and every single one of these can all be built in there as well. So within that portfolio, you can actually track how a certain amount of money that has been bought or a certain amount of money that has been invested, and then subsequently when you sell those positions, how you would have performed over time as well. So that's a way in which that you can start and that just get a sense of how you feel about it and how you react to that type of a process. You can certainly take those and run with those as well. Now, I realise at this stage I'm right up against the clock of the hour, so I'm actually going to cut it there. What I'm going to say is during the next episode, I'm going to take you through the next 4 things that you can do to make sure that you can really lever the power of how to be imperfect with money and how to just prevent problems from happening, how to manage your risk really, really well. So what I'm going to say is in the show notes, I am going to make sure and give you the link to the next episode of Fantastic Female Fridays, where you're going to hear all about the other 4 techniques that I have. I've simply, as I say, run out of time today because Allegra was brilliant, had lots to share with you, and I wanted to give you some examples as we went along. So, on that note, everybody, I am going to bring us back here to the centre. And before I go, I just want to come back to Louise's point. How do you take more risk? Well, what you do there, Louise, is number 1 is acknowledge that you're getting paid for that uncertainty. Number 2 is diversify your portfolio. Number 3 is put a stop loss in place so that you can manage your risk to the downside. And number 4 is try it out beforehand using a paper portfolio so that you can just get a sense of how it works. But also talk to people about it, Louise. Talk to people about how you're feeling about this and how you might want to be coached through it from an understanding or a sentiment point of view. There's always somebody there who will know how you feel and help how you can navigate forward. So, to everybody here who has joined me today, as well as Allegra Brantly from Factora Wealth, thank you indeed to each and every one of you. It's been a joy, as it always is, and I'm really looking forward to seeing you for the next episode of Fantastic Female Fridays. See you, everybody. Have a super weekend. And please, if you like today's show, please give us a like. We really appreciate that. Please do like the show. Share this episode with your friends in WhatsApp groups. Tell them all about it. And of course, if you can, subscribe to the channel as well, so you know the next time we're going to go live. Thank you, everyone. Thank you so much indeed for joining me here today, and I'll see you next time. Bye.